Yes, guys, we just seen another bankruptcy, an insolvent hedge fund. This information did just break about 40 minutes ago. Now, the main highlight of this video is going to be the margin call situation that is currently unfolding. We are going to see margin calls, the likes that we have not seen in a very long time. We have some specific hedge funds to go over and some specific things I want to talk about, and this is incredibly bullish for AMC stock because when essentially a hedge fund gets margin called or forcefully liquidated, they have to get rid of all of their positions, short positions, long positions, literally everything, and the markets are not in a good place. So we are starting to see these margin calls. So it's been a long time in the making. It's playing out exactly like we have forecasted here on this channel. So if you guys want to stay up to date with the most in-depth, up-to-date, concrete information, hit that like button, subscribe to the channel. Love to have you over here. If you guys want to take it a step farther, support the channel as well as get access to all of my trades in real time, link down below in the pinned comment. Actually gonna go ahead right now, sell out of a winning trade up about 100%, about $300 profit on that. Would pay for your cost to be in that program for well over a year just off of that trade that I just exited out of. So let's dive into this information, guys. So first and foremost, what is happening on the day? If you guys are unaware of essentially the situation, the markets disagree with the Fed. Powell, the Fed, came out and said, yeah, we expect 1.8% GDP growth. We expect a great 2022. We don't see a recession coming. There's no signs of that. At the same time, we've seen a negative 1.5% GDP print. You're seeing companies laying off 10% of their workers, like Tesla. Other companies laying off more than that. A lot of crypto companies are really laying off a lot of people. And you did see your first ever bankruptcy that we have not seen in a very long time. A well-known company, Revlon, I believe, ain't that like a makeup company? So yeah, definitely a couple things that are not so good, and where the markets look like they're going, also not so good. We are seeing some interesting things with AMC as well that I do want to talk about, but let's get into this margin call situation. So crypto hedge fund Three Arrows fails to meet lender margin calls. Let's go ahead and click an answer on here so we can go ahead and come on, give me a break. Just 1 second, guys. Sometimes they want you to answer questions to get access to their service, but it says Three Arrows Capital failed to meet demands from lenders to stump up extra funds after its digital currency bets turned sour, tipping the prominent crypto hedge fund into a crisis that comes as a credit crunch grips the industry. The group's failure to meet margin calls this past weekend makes the group the latest victim of an acute fall in the prices of many tokens like Bitcoin and Ether that is rippling across the market. Singapore-based Three Arrows is among the biggest and most active players in the crypto industry, with investments across lending and trading platforms. Lenders have sharply tightened up how much credit is on offer following tremors over the past month. Celsius, a major crypto financial services company, blocked withdrawals last week, while a pair of major tokens collapsed in May. So the crypto situation is getting much worse, and that is a very bad thing for the overall markets, because it's kind of like one industry. If one industry is in a lot of pain, right? If real estate, for whatever reason, was in this massive bubble, there's a lot of debt, banks were betting on bad debt like they were during 2008, that feeds over into the stock market, that feeds over into the bond market, that feeds over into global markets, and crypto is now call it a global market, right? It's has global effects, and people invest in crypto very seriously for a lot of people. So to see these kind of margin calls, to see this happening, is really just bad for the overall markets, and it is putting a noose on hedge funds overall. Now, it says, look, Tiger Global partner behind big Carvana wager leaves hedge fund. And this is obviously not a good sign for Tiger Global, as their fund is down 52% this year. And I've got a lot of questions about what do I think is going to be the next hedge fund to actually go down, and I think it's Tiger Global. They're down 52%. That's a margin call in and of itself. That is not a good situation. Now, look at this article as well. Here's a different view of hedge fund performance. Many large hedge fund managers had a brutal spring. Tiger Global lost 14% in May amid continuing sell-offs in technology. Pershing Square was down 9.5% after its bet on Netflix led to an 8.1% loss in April. Melvin Capital shut down, led some investors to worry if it would trigger a wave of hedge fund closures. Even though these names have dominated headlines, raising concerns about hedge fund performance in general this year, a deep dive into data on institutional funds tells a different story. Pivotal Path's Composite Index, which reflects the performance of 10 broad strategies, was down only 0.8% in May and about 1% for the year. Even more telling, 47% of hedge funds generated positive returns year to date, and 62% have either gained or lost less than 1%, according to data that the research and data firm provided to institutional investors. This is not true. This information is simply not true. On average, 8% loss for hedge funds is where the hedge fund industry is at for 2022. And a matter of fact, you have never seen this kind of selling from hedge funds, and they are selling at the lows. So it says hedge fund selling was never more furious than in the last 2 days. Goldman's data shows clients boosting short sales aggressively and leverage near 5-year lows as S&P 500 enters a bear market. This was actually on June 14th, and we are even much lower now than we were then. And even on this day, we were down 30% year to date for the NASDAQ. And if we look at the NASDAQ year to date now, we're down about 33%. So the situation is in a not so good situation for hedge funds. Let's just put it to you like that. We're definitely going to see a round of margin calls here in a very dramatic way, especially if the markets continue to fall. There's no other way around that, and specifically for AMC stock, that could mean some pretty big moves to the upside. You do see weird moves. When hedge funds do get in trouble, right? When hedge funds got in trouble last time around with AMC, GameStop, other, stocks, the markets were falling, but these stocks were actually going up as some hedge funds were forced to get out of their losing trades. So there is that. Not too much else to actually add on top of it. Just the fact we're down 33% year to date. Crypto markets are down, bond markets are down, everything is in the toilet. You are very, very close to actually seeing these margin calls. So I think that's very exciting. I think we're very close to seeing something big for AMC stock, and it really comes down to, do you have the time to sit and wait it out? Honestly, if you've been holding AMC for a while and you haven't been dollar cost averaging this whole time, then it just wouldn't make sense to sell anyways, unless you absolutely needed the money for something else that came up in your real life. We'll just call it that. So I think we're very close to seeing margin calls. Now, what is interesting for AMC stock for the day is you're actually seeing a positive order value of about 71% for the day. Even though the stock is down about 10.5%, you are seeing some of those 15, 13.50 calls coming through, 14.50 calls coming through, and some $20 calls coming through. Some put activity as well, but most of it is actually to the call side today. 71% positive order flow is a pretty big deal. And you are seeing the cost borrow minimums going up in a big way as well, 15% for cost borrow minimum as this hedge fund news is coming out. It's looking more like forced liquidations than not. These lenders that are willing to lend out AMC stock, they want a decent return, and 15% cost to borrow is a decent return for any hedge fund to lend out stock, right? Who wouldn't lend out stock in this market environment for a guaranteed 15% return? That's pretty much a no-brainer, right? Cost to borrow max at 25%. That's more like it. That's more getting to those higher end levels, and it's basically implying that we are going to see a decent sized move to the upside. Now, we do have 100% share utilization. You do have Free float out on loan at about 38%, so all is good there. The days to cover at 3.75, shares out on loan 195 million. So the information here looks very good. Like we talked about in the last video, you're only pricing in a 50 basis point rate hike coming at the next Fed meeting, and the actual terminal rate has went down just a little bit. We were expecting over a 4.5% terminal rate just yesterday. Fed meeting came out. Now we're expecting a 3.75 to 4% terminal rate by July 26, 2023, where the Fed is really going to stop raising rates. That is what the terminal rate is, and that's what that does mean. So there is that information. Specifically, if you guys did not see the last video, why the markets are actually selling off, it's because the markets are afraid the Fed is going to break something. They seem oblivious to what is going on with economic data. Fed Jerome Powell says, hey, we don't see the information coming into us from the economy that is bad. Things look good, and that is obviously not true. Anyone that has been around in the markets over the last 6 months knows that is a bunch of BS. So why is the Fed saying this? Well, they probably didn't want to freak the markets out, but by not acknowledging there's a problem, it makes the markets think they're going to make a mistake that potentially could keep the markets down a lot longer, and potentially make them go down a lot more, like, hey, raising rates during a recession. That's something the markets are going to start getting very, very fearful about. So that is really what is causing the markets to fall today, as well as that real estate data for May showed a 14.4% monthly slowdown in the housing starts at a time where there is a chronic shortage of homes. Obviously, not good for the housing sector. Now, it also says a Fed manufacturing reading show continuing contraction in the Philadelphia region. Weekly jobless claims were higher than expected as well. So just overall not good things that are happening here today. But ladies and gentlemen, that is what you guys need to know. We are going to be talking about in the next video what happened at the last Fed meeting, how this is so similar, and what could essentially happen down the line. What are going to be the next big catalysts? What am I doing with my overall personal portfolio? Things you guys probably want to know, and you guys probably need to know at the current moment, because the Nasdaq down 5%, not good. A lot of people are freaking out. A lot of people are panicking. So I hope you guys stay tuned to the channel for that video. Should be coming out at about 5 o'clock Eastern Standard Time. Thank you guys for watching. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Get your free stock down below as well with Webull, Moomoo, and Public. Get yourself that free money just by depositing $100, starting a brand new brokerage account. It's always a good idea to have money spread out in different places. That is what I have been doing. And if you guys want to come trade with me live in real time, link down below in the pinned comment as well. Thank you for watching, and I'll see you in the next one.